So yeah, my name is Mark Murano. I know a lot of people rolling in here from over the years, 20 plus years, don't know where that has went. I was asked by my colleagues to speak on this topic as I think it is a wonderful topic and Empire Life does a tremendous job bringing this to you and your clients. Just some perspective. So for all the cases of PAR Empire Life sells across the country, almost 46% of our app count is dedicated towards child policies. So as a company, we have a real focus on continuing the growth on this market and continuing to bring ideas. And I love the concept. I love the idea of bringing the policies to children and or grandchildren, if you're depending on the age. It's a wonderful opportunity to have another asset, a legacy. We'll get all those marketing ideas as we go through this presentation in place for the next or further generations to come that go into buying a policy such as this. So that's number one. Number two, and I, as a wholesaler and as a former advisor myself, I work and coach a lot of advisors, and the topic is always about growth and expansion and finding more clients. And we focus so much as an advisor. So I'm looking at my marketing hat for a sec. We always focus so much on the next client or finding some new opportunities, some new COIs. Within our block of clients, if it's a market you want to go after, there's a tremendous opportunity to market to your own block. If your current demographic is 50 plus, you have children and grandchildren to speak to. If your current clientele is typically 30, 40s in the growth phase of their life, you can bring in the children, or you can market to the grandparents of this. Where I'm going with this is the compensation on all PAR policies are competitive, and I'm happy to do good work and make some good money. But the real gold here could be in the prospecting, the opportunity to hit multi-generational opportunity could allow for massive expansion versus finding another client I can deal with the family I'm already dealing with. So from multiple facets, I'm going to talk to you today about how to build it, how to structure it. Let's show you what the agenda looks like. I'll talk about how to underwrite it. I'm going to talk to you about which products to pick, how to structure it so it's the most sound, and some marketing ideas and sales ideas as we go along. Wendy's been kind enough to monitor the chat for me in case I miss anything. But if there's any questions, do ask, and Wendy, just chime in if I need to answer anything that's pressing. So that's our agenda. I'm sure all of you know of our Fast and Full e-application program. Best in class. We're generating 90+% of our applications through our e-app. We do happily accept paper apps if is more comfortable for you, so not to exclude anybody. But why we focus so much on it allows us to be nimble, allows us to be effective, and to really bring differences to the market. So where I'm going with that is it's allowed us to change and improve upon our juvenile underwriting experience. By owning our e-app, as in we run it, we own it, we built it, we have people doing, I think we're up to over 4,000 changes since the implementation of the contract of the e-app, simply by having our own internal staff. It allowed us to look back and look at a market we focus on, which is child policies, and improve upon the time it takes to underwrite a policy simply by changing the amount of questions that were once for adults don't necessarily apply to children. So a lot of opportunity there to speed things up. We eliminated about 66% of the questions in our about I think we're about 6 months ago now. So if you are writing this, you would have seen a big change in the speed of underwriting of these policies. We get a lot more auto approval rates and a lot more straight through processing of the application. I think the statistic. Oh, and actually, sorry, if you need help, and I'm happy to send this to you as a follow up. We have a demo on how to actually underwrite or to do a child policy properly using our Fast and Full. So we have lots of YouTube videos to kind of give you hand on that as well. But the takeaway for this initial portion of my presentation is really, I'm going to give you a great idea, hopefully give you some marketing strategies that work for you. But from a partner carrier standpoint, we are getting out the door. So out the door issued within 24 hours, 80+% of our juvenile applications. So remembering, underwriting of children is really pass fail. We don't rate children. We don't do exclusions. It's yes or no. It's typically so by making our Fast and Full focused a lot on juvenile policies, we're getting over 80% of those apps out the door in 24 hours. Typically, that'd be human touched. It's just getting out the door, issued, approved. So if you're looking to be efficient as well as a great product and great marketing, Empire Life would be your definite company of choice to look at going forward on that. Whether you deal with me or one of my account executive partners throughout Ontario or the country, you are welcome to reach out, and we'll get you the right person to help you out. If it's, again, not me, you don't know who your contact is. Learn fast and full. I'm going to go into some marketing later on, but I wanted just to start by saying we have an entire program called our Kids Start Strategy. So if you are interested in this market, is something you want to focus on a market, Empire Life is going to make it easy for you by creating an entire marketing branded kit around this that is advisor focused and client and consumer focused. So I'm going to come back to this near the end of my session, but I just want to give you a bit of a teaser to say there is a whole marketing strategy we call our branded Kid Start Strategy that you can use to help in your marketing to make it very, very simple to use. To look at the product first, so we're going to just talk about why Empire. Again, there's lots of great companies out there. Again, Empire Life does a ton of child business due to pricing, product projections, values, a lot of those different reasons. We have advisors coming to us. And where Empire continues to shine is we have great projections. We, on paper, we look very strong. We're seeing all those numbers are, age 80, 90, 100, cash values, all those projections. It keeps in line with the market. But what I love and what I talk about a lot as a wholesaler is the guarantees. All we can do when showing an illustration is guarantee what is said to be guaranteed in the contract. Empire Life, guaranteed premiums are lowest in class typically. Guaranteed cash values, highest in class typically. Initial coverage, highest in class. Paid up coverage, highest in class. Those guaranteed numbers are something for you as an advisor, presenting a solution that will be lasting for generations, potentially, depending on how old the child is, in order to be able to offer something with a little peace of mind. Empire Life contracts are, again, project well. We have the returns and the strength in our power fund, but really the guarantees is one of the biggest parts of this because it allows you the ability to show something that gives you a lot of security in presenting something to client base that's a lot of times based on purely on projections. In terms of contracts, we have two par contracts available to sell. We have our OptiMax Wealth and the Estate Max. Every carrier seems to have these two versions, your wealth product and your estate life insurance contract. 9 times out of 10, it'll be an Estate Max sale with Empire Life. We do OptiMax quite a bit if you're looking for the earlier cash value, but for children, the vast majority of the time, it'll be the Estate Max. We have the life pay, and Empire is known for our 3 guaranteed payment options: 20 pay, 10 pay, 8 pay. Are all contractually guaranteed, so not depending on offsets or ADO in order to meet your limited pay criteria, which again, when selling to a child, it's great to have a focus on limited pay. In terms of dividend options, again, just to focus in a second, again, everyone in this call, I'm sure, is well versed in par, but I will just draw your attention to 3 of them. Paid up additions is your standard choice. Enhanced coverage gives you a tremendous amount of early guaranteed coverage, contractually guaranteed. And then the third being the cash payment option. I'm going to circle back to that a little bit later on, but as an industry, we forgot about the cash payment option. Whether you're talking about children or adults, if you don't know what I'm talking about, reach out to me or your Empire wholesaler to talk about switching your dividend option from growth of paid up additions to cash if they want some supplemental income at some point in their life. So something to really focus on if you're especially selling personally owned policies versus corporate. A strong point that people tend to skip over. And I love personally promoting quite a bit. So happy to have that chat with you if it's something of interest. The concept itself is commonly known as intergenerational wealth transfer. Boy, we don't market well in our industry. But what we're doing is transferring wealth from multiple generations. So intergenerational wealth transfer, typically from parents to kids or grandparents to grandchildren, allowing for the transfer of wealth down multiple generations. So just visually, grandparent buys, whole life policy on grandchild and supervised by the parents. When promoting this, when discussing the concept, more often than not, the parents are already putting away our ESP money and other savings for their children for their long-term prosperity. And the focus for today, and I'm sure a lot of the other companies that will speak on this will focus on the grandparent sale because it's giving them another opportunity to provide something of value beyond just a cash payment or a cash gift, providing another long-term benefit. And why we're going to look at Empire for this is the low cost of the permanent insurance, the guaranteed and the accumulated values, as well as the potential for some cash value withdrawal taxed in the right hands, which could be the grandchildren down the road. A great opportunity to implement this strategy. Why it can be right for the clients you are talking to is they believe in insurance. So they're going to provide for affordable coverage at a very young age. None of us wish we bought less insurance when we were younger, right? You ever said, I wish I bought less insurance? No, you didn't. I wish I bought more. So again, you're putting something in place that you only wish you bought more of when you were younger. So number one, get it. If you believe in insurance, you have believers in insurance, great to present to them and let them guarantee their children's and grandchildren's insurability going forward. Guaranteed insurability riders, you can add extra coverage for down the road beyond what they can potentially afford today for more coverage down the road. Cash value, I'm going to go back to cash value quite a bit, and that is the focus of a lot of the sale, offering an injection of cash at various phases or stages of the life cycle of the policy to help with for the children and or great grandchildren of the original owners, the grandparents. Remember, the transfer in this concept is tax-free. So we have the Income Tax Act, and I wish I remember the section, and I apologize for not, but in the Income Tax Act, we allow a transfer down lineage with no tax implications. So if a parent buys a policy on a child, they can transfer ownership at adjusted cost base, no tax disposition, even though the parents paid for it. Grandparent buys for grandchild or great grandchild, as long as it's down lineage, they can buy it, pay for it out of their own money, and there is no disposition back to original payer owner of the policy. If there was a withdrawal or surrender down the road, it is taxable in the hands of the owner at time of the surrender or withdrawal of monies, which again theoretically would be the children when they need those monies. So a great way to pass along wealth, see the growth, and there is no disposition. Where again, if you're giving a financial gift, you could theoretically be looking at dispositions, taxable dispositions back to the original owner of the fund. So great way to pass along wealth in a very efficient and completely tax legal way. Limited pay options, I find, work extremely well from a positioning standpoint because no one wants to pay forever, especially on kids. So 8 pay, Empire's fastball, 10 pay, 20 pay, all guaranteed options. And last one, legacy. And I'll circle back to when I get back to the marketing side of things. Insurance is great, the cash value is great, but legacy is the fastball. Legacy meaning this will be here once grandma, grandpa are gone. Once grandma Joan and grandpa Paul have passed away, this gift lives past beyond them. It'll be given to their grandchildren and potentially great grandchildren if the death benefit is available upon passing of the grandchildren's children. So legacy is the hot button, is the option, is something we should be talking about when you're bringing up this with clients. So as you're thinking through this presentation of clients that I want to speak to, legacy is a big word that I would strongly focus on concentrating on. So from a design standpoint, parent or grandparent can purchase the policy on the life of a child. If it's a grandparent, the child can be the insured. The parent has to sign off as the guardian or parent of the child. So there'll be 2 signatures, grandparent and parent, as part of that. Again, a lot of times you consider limited pay options. They can pay monthly, pay annually. Typically, annually works better for grandparent policies. We need to have a contingent owner, which I'll talk about in a minute. And again, transfer ownership at an expected time down the road when it is in the best interest of the family to give the policy to the child. So from a design standpoint, again, grandparent purchase Empire Life's participating whole life policy on their grandchild. They retain control of the policy until it is transferred to the child when is the right time. So what I mean by that is you don't need to transfer it at 18 or 21 or 25. It's whenever the owner of the policy wishes. So if grandparents feel the parents are the children are not financially responsible enough to take over a policy with $35,000 of cash value, they can hold on to the policy for a longer period of time. Or again, give it to them to 18 and it's theirs to do what they wish. Highly important when structuring these contracts, you have a contingent owner. If grandma, grandpa were to pass before the payment period is up, you don't want the owner going to their estate or to the children, of course. You want the owner to be typically the parent and or guardian of that children. So important when structuring this that we know who the contingent owner is. On typical applications, not something we skip over, but on this type of contract, this structuring, you definitely want to have a contingent owner in place. Very, very important. And as an added structural advantage I'd recommend, and having done this many, many times over the years, is you may, even after transferring ownership to the children, but before doing so, make the parent the irrevocable Benny. So let me just explain this. Grandparent owns it. Grandchild is the insured. Parent is the irrevocable Benny. Why that's interesting and important is the irrevocable Benny has to sign off on any sort of withdrawals or surrenders of the contract as part of their rights as an irrevocable beneficiary. Therefore, even when grandparent does transfer ownership to children, they still need their parents to sign off on pulling out that money. So it's a great way to add a little extra control into the application without getting into any sort of fancy documents or trust agreements, et cetera, et cetera. So irrevocable Benny is an option, not for everybody, but it's something to consider if you are a little worried about the grandchildren spending it too quickly or irresponsibly. So we'll do a little case study to kind of go through this.
There are a couple of questions. One of them is, sorry, I just have to move something on my screen. So what happens to the existing value building up over the years when the client decides to switch dividend from paid up to cash in the later years?
Great question, which again, I'm going to address a little bit later, but I'll answer it now. Is it would be tax-free until the ACB is ground down to zero. Once ground down, then it would be fully taxable at the marginal tax rate. But depending on the year done, like for children, typically retirement age, the ACB be ground down to zero about retirement. But if it was for an adult purchasing the policy, moving it into their 60s, you could get 10 to 15 years of tax-free payout on that dividend and moved over to cash payment before it became taxable. So a great supplement to income. So again, reach out to me, reach out to your wholesaler. Great marketing idea if you're not using it already.
Okay, thank you very much. The next question is, if the parent is an irrevocable beneficiary, what happens if they and the grandparents predecease the client and ownership has not been changed?
Well, it will end up in the estate of the owner at the time, and then it'll be distributed. It'll be reconciled by the executor of the estate. It just gets a little more messy.
Yes, unfortunately. And somebody also asked, can we get some of the slides of the presentation? Well, this is being recorded, so you can see the recording once that's on the IDC Win Big website. And I don't know if Mark is okay to share the slides. If he is, he can.
I can send a PDF, Wendy.
Okay, perfect.
I may alter some, but I can definitely send a PDF of the slides.
No problem. So when you send those to me, I will also add them onto our IDC Win Big website.
So we'll do a bit of a case study to look at. I have a few different ones to look at from different marketing angles, but I'll get a quick case study here of kind of your typical sale, whether it be parent owned or grandparent owned. So if we have Liam Nelson is a male newborn that we're looking at. Grandma Nelson, and we need a contingent owner as well, but Grandma Nelson is the original owner of the policy, purchasing an estate max guarantee 20 pay with paid up additions. So this is your traditional sale. This is the most common sale sold. Sometimes life pay, again, if you want to bring the price a little bit down. But when parents are buying for children, the most common sale tends to be life pay or 20 pay. With Empire, when it's grandparents, it's 20 pay, 8 pay, 10 pay. Those are your kind of three different options depending on budget and length of time you'd like to pay. So more often than not, it's a limited pay solution, but again, budget dependent. So in this case, we're going to put $100,000 of coverage, paid up addition. So just as a little underwriting discussion, as a side note here, everything up to $250,000 on children provides no real underwriting concern. Once you go above $250,000 of life insurance on a child, especially a newborn, there is questions around why. So the underwriters will want to know, are you believers in insurance? So that means mom and dad both own insurance. So they want to see mom and dad have at least double what the kids have, as an example. Or if parents are uninsurable, they'll be coming into wealth and need a large amount of insurance up front, whatever it is. But just as a side value add part of this presentation, underwriting 250 and below, underwriting financially, no problem. Above 250, there is why do you need the coverage you need on a newborn child. So a little help on that. Guaranteed insurability rider. Whenever I'm working on a quote, I typically, especially for newborns, young children, I will add the guaranteed insurability rider. Empire Life, you can buy from $5,000 to $50,000, and it's convertible each one of these option dates and or marriage and or childbirth. up to a maximum total guaranteed insurability of $300,000. So if I have $50,000 in my guaranteed insurability, I can convert it 6 times and get another $300,000 of permanent power policy with Empire Life at these option dates given, or stages of life events, marriages, or childbirth. Again, typically I like adding in payer, death, and waiver if it's a young parent purchasing. If it's a grandparent and they're at 55 and under, I'll do waiver of premium. So it depends on what age. I'd love to have that on, simply because for a small cost, it does eliminate the propensity or the issue of a premature death, especially if we're doing a 20 pay, which is a period of time. So from a structural standpoint, state max 20 pay, paid up additions, guaranteed insurability, and then waiver of premium. That's your standard structure. And when you're looking at a policy, because you're protecting today and tomorrow. From an Empire software standpoint, I want to show you how to do it. So give me 2 minutes on this. This is very Empire branded, but it's important to know how to quote this. So here I have a snippet from our eVision software, and we have Liam here, who's 0 years of age. And just what's important, where I have my little arrow, is the role. A child can't be the owner of a policy until they're 18. So we have Liam as only the insured. And I can't fit it all on one screen. So I did a little snippet for below would be the second life, which would be grandma in this case. So we have a female, not the role of the insured, only the owner. So it is important from a structural, how do I quote this standpoint? Because if you only put the child in, you get some error messages. It'll be red. This box here would end up being red if I didn't add in the second life and have the insured unticked for grandma, and it only has the owner. So important from a how do I quote this thing standpoint. This is the big takeaway from the quoting software standpoint. Additionally, my coverage tab here under red, paid up additions, then we choose our product. We have a 20 pay, $100,000 face amount, easy enough. Riders and benefits. So under the benefits section, I have guaranteed insurability for $50,000. And again, owner disability waiver of premium because she was over 45. This would be your most common standard structure and how to quote it using the Empire Life eVision software. So just as a note here, we currently have 2 versions of software. Envision, which is our downloadable software we've had for many, many decades. We are transitioning to eVision, which is an online-based platform. Now both have them simultaneously, same rates, same products, but the eVision is the product of the future. So I really hope you get on that because it fits in nice with Fast and Full and the whole online accessibility of Empire Life. So if you're not already using eVision, reach out to your wholesaler or inside wholesaler for some information on that. A little bit of training. It's easy. You'll get used to it super fast. So for this particular scenario, Liam, the focus here is not necessarily on the life insurance, but what it produces. So when we present this, for those of us that are maybe a little uncomfortable in presenting the idea here, is the focus is the premium provides these type of cash values. I've age 45 and 65 example. I have pointed out the dividend here. Remember, this is a smaller policy at $1,200 a year. At age 65, the projected dividend at that year based on current dividend scale would be $5,540 annually. So someone asked me this question earlier about changing to cash payment. So theoretically, I could change to a cash payment and take that $5,540 in a cash payment, and I'd have paid up death benefit at that point of $426,000. So the death benefit would stop growing in essence. That's a paid up value of $426,000, and I start taking the dividend in cash. So in this particular scenario, the ACB would be zero. So the $5,540 would be taxable. So I love the cash payment conversation for a little bit older clients where the ACB is still high, where I can take a chunk of that money out tax-free. But again, still, that being said, there is an opportunity here to get a portion of the policy being paid out as a kind of what's in it for me, give me some income when I need it versus letting it grow further. So that is an option. As an example, age 65 is a random age that I've chosen. If they did not take the cash payment and kept letting it grow, the death benefit at age 90 would be projected at $803,000. Now, okay, is that a good number or a bad number? So I love showing the equivalent internal rate of return. So if grandma would have invested $104.58 a month for 20 years, she would have had to have earned net of tax, so after tax, 4.43% in order to have the balance of $803,000. Okay, so For a 90-year investment to having what is in essence, a 6, 7, 8% rate of return, depending on the type of investment you're in, it is a wonderful differentiation of investment class for the end death benefit that is payable. Now, going back to my legacy conversation, this now would not be paid to Liam, but Liam's children and or grandchildren. So that's the positioning and discussion. Now, let's take this a step further. And this is where Empire Life does a lot of our work. What if grandma wanted to do a one pay? And I'm going to give you two scenarios, but I'm going to give you the first and the simplest first. So if Liam, again, so we did the 20 pay before, $104 a month, total outlay of premium would have been $25,000. If grandma did not want to pay for 20 years, she could do an estate max 8 pay and bring that down to $2,274 a year. So Empire is extremely popular in 8 pay. It allows you to get that premium down. It's 8 years. It's contractual. It's guaranteed. Projected values are strong. Internal rate of return, et cetera, et cetera. 8-year commitment on premium there would have been $18,195. Or what a lot of people do, not as much as we did a year ago, because now with annuities, so I'll get back to annuities in a minute. But as a simplicity, as a way to do this, we could use our side account. Empire Life has an available side account, kind of a throwback to the Universal Life days, that we will allow you to give us a single premium we will hold the money in a side account in trust for the owner of the policy and annually transfer money into the premium. So in this case, the annual premium of $2,274 you'd cut Empire a check of $17,881 based on a 0.5% interest. We're doing it 0.75 right now, but I did 0.5 interest rate on our side account. It's not a big payout. It's not a big money maker. It's a convenience thing. So when I sell these with advisors, it's not really to do with saving money per se. It's that I have the money in my account. I want to give this gift. I want it to be done. I want to cut one check. So instead of giving $2,200 a year, I'm going to give one check to Empire Life and it's done and done. 8 years it's paid. I'm going to use the conservative rate of return. Even put 0% if you want to be ultra conservative and just give us the annual times 8 and whatever's left over we paid up to the owner of the policy at time of maturity of those 8 years. So if you're looking for a simplistic way of doing things, the 8 pay is very cost effective and you can use the side account to make it super simple. Allowing for, again, the ease of doing business. So you'd be surprised if you don't already do this or don't already see this before, the amount of sales we get, because it is so simplistic to present this to the client. From a remuneration standpoint, it doesn't really make us extra money. It's really the $2,274 that you're making the compensation on. Again, to repeat myself, it is a convenience. It's an ease of doing business. Money's in the account. They want to pay for it. They want to give each of the 3 grandkids $100,000 8 pay. Done. Easy. It's done and done. And again, no concern of it ever lapsing. So that is the 8 pay conversation there. Wendy, I'm going to stop again. I usually get questions on this stuff. Is there anything that popped up?
There are some more questions. Let me I have to scroll through them here. Somebody has asked, do you have to complete a full application to add insurance under the GIO option? And if so, what's the process?
So with the GIO, you're as with Empire, you have to ask the medical questions on the children. So it'll all be part of the GIO anyways, but upfront underwriting. On the back end, no, it'd just be a conversion form. Okay. If that's, I'm not sure which end end of the question that was at, but upfront underwriting questions that don't change, adding GIO, and then back end it's no underwriting.
Okay. And then it's kind of a 2-parter. It says the grandparents can have 0 insurance, I guess I'm assuming on themselves, to buy this for their grandson. And how about the parents? Do the parents have to have double the amount of the trust? So I think she's looking at financial underwriting. Like if you're a grandchild, you don't have the insurance, but you're doing it on your kids.
Right. So I mentioned that kind of earlier. So 250 or less, underwriting doesn't really care what parents have. You start looking for more than 250 of life insurance on the children. They want to know what parents have, not necessarily grandparents. Like so if you want to buy $1 million of insurance on a child and parents don't have any insurance, I need a good cover letter explaining why, i.e. the most common being grandparents are wealthy or parents are wealthy and they're pre-buying insurance for a future need. Or they'd buy insurance if they could, but they're not insurable. So as an example, but to answer the question, 250 or less is we quote unquote don't care.
Okay, perfect. Because that question came up a couple of times. Sorry, there's a few more. Let me just
no, ask please. This is good.
Actually, no, I think that's it because there was some in Q&A and there was some in chat and they were all basically the same.
They're similar.
Yeah, exactly. Sorry, one just came in. How do I get a quote or get the amount required for the one pay? Well, I know you just showed how to get
It's
a
right
quote.
here on the screen.
Exactly. Yeah, you just showed that. So I think
yeah.
Yeah.
So again, reach out to your wholesaler, myself or inside wholesaler. Lots of people do help you with quotes. You're not on your own here, but if you want to do it yourself, you just literally go to your last column here this coverage, which you probably never even noticed is there, side account, and you just put a prepayment of 1 year and it will spit out the amount. Okay. Thanks, Wendy. Anything else? Let me know.
Yeah, I will. Thanks.
Okay, so that's the 8Pay. So again, 8Pay is going to be your lowest cost overall premium for anything in the market you're going to find. If I want to buy a straight $100,000 for premium commitment, your 8Pay is going to be your cheapest overall premium number you're going to find across the market. So it's a little more upfront theoretically, but on a short period of time, you're spending less overall than you would have with anybody, most other carriers. Excuse me, something caught my throat. In the market. Now, I'm going to give you one more tip, and it'll really get into when I get into my next section, is Empire will allow you to put ADO on your power contracts, Empire Life, not the 8Pay, unfortunately, but you can use the Life Pay, 20 Pay, and 10 Pay. And minimum ADO for children is only $25 as a minimum. Adults is 100. But where the sweet spot is, and I'll really get into my next marketing idea and give me about 5 more minutes, and we'll get into that, is if you're doing an Estate Max or OptiMax 10 Pay, you can put ADO on top of it for a child policy. So why I love this is you get the guaranteed of the contractual 10 years, so it's a shorter commitment, and I can still juice it with some more ADO to just drive those numbers and those cash values even further, because the focus tends to be on the cash value versus the death benefit. So it allows you to get the guarantee you're looking for. You won't get as much ADO as you would on a Life Pay, but you get the best of both worlds. You get your 10 Pay contractual as well as some extra premium to go into the policy. It could be anywhere from 10 to 25 to 30% more premium, depending on the age of the child, but a nice little add-on. So we'll circle back to that in a few minutes, but I want to give you a little extra Empire-esque sale that you can take advantage of. And the ADO is that, of course. So the marketing. So this is where I want to kind of get back to. Hopefully I didn't bore you with kind of the structure if you already were totally familiar with it, but really wanted to point at some of those to make sure we're all on the same page. As I alluded to at the beginning, I think the real opportunity, if it's something you're interested, if that's not a market for you, you maybe shouldn't be on the call. But obviously, there's something you've come in, you want to see credit, you want to learn something. This is a great opportunity and a great way to market to, in my opinion, existing clients. If you have a COIs outside of the new clients, wonderful. But what a great way to go multi-generational marketing to, again, whether it's parents going to grandparents or grandparents going down to parents, generations down. Great way to get to your existing clientele to reach out, whether it be through your social media, your direct marketing, your newsletter, your video messaging. Any of you that work with me, you know I love different creative marketing ideas. I do video messaging, I do emails, you name it. Happy to help if I can give my 2 cents, any of that stuff. I'm here to help if you like. So the marketing side. So Empire Life has a lot of branded marketing material for you. We have an entire landing page called the Kid Start Strategy, which will be part of my follow-up email I'll send to Wendy. So you can see all our marketing pieces in one unique spot. So we call it their Kid Start Strategy. We're giving broker as well as client branded, focused client and focused broker material to help you understand the concepts and stuff that you can send directly to clients, pre-approved, compliance, etc. Also, there's a nice little 2-minute video if you want to put onto your social, your website. If you want the URL, you can upload and have it on your own website, whatever you want. It's our Kid Start video, kind of explaining why you might purchase insurance on a child. So maybe if you're not good at explaining it, the video could do that for you and kind of lead into a great conversation. So Empire has a prefabricated video on this. We actually have 2 videos that we created in the last couple of years, the Kid Start, as well as keeping the cottage in the family. That's totally a separate conversation for another day, but I appreciate Empire's want to go to help you into market to help educate your client by doing so. So if that's something of interest, again, it'll be in the link in the follow-up email. So take advantage of that marketing. So why focus on the market? As I kind of alluded to, you're offering customized solutions to your affluent, if you will, parents or grandparents that want to pass along wealth, intergenerational wealth, tax efficient intergenerational wealth, where the growth is all going to be taxed in the hands of the end child, grandchild. And again, as I've kind of hit home many times during this chat, is the next generation of prospecting. So if you are in a growth mode, you want to expand your clientele and are sitting on, assumably hundreds or plus more clients, great way to hit home on a new idea, a new concept, which again, child policy may not generate the massive amounts of commissions you're looking for, but again, what a great way to ensure assets aren't going somewhere else if grandpa pass, and B, kind of generate some opportunity to keep everything within a singular family as the advisor of choice. Not to get into the whole LIMRA stats, but the statistics of money that leaves the existing advisor once mom and dad pass is tremendously high, well over 50%. So let's keep those assets in your practice by ensuring that the entire family is insured all the way along. So if that's something idea, talk about with me or your wholesaler, and we can have a great conversation about prospecting. The last thing I'm going to go through is I sent out a Monday tip to my advisor. So if you're in my area, you may have seen this last 2 Mondays ago, but I'm going to show you how you can save your clients some money. It's a kind of a /marketing/ idea of matching an annuity to a 10-pay. So I can save, in this case, 11% on a child policy by matching a term certain annuity to a life insurance contract. So in this case, I used a female, 1 year old, that looking for $100,000 10-pay estate max. The premium in this case is $1,656. So I could use the side account like we talked about before, which again is convenient and easy. And again, a year ago when interest rates were at all times low, I would have just used the side account because annuities were not paying much, if anything at all. But now, all of a sudden, annuities are paying out some substantial amount of money, even for something as simple as a 10-year term certain. So here's my quote I did in May, where I matched the annual premium of $1,656 to the 10-year term certain and worked backwards, which required a deposit of $14,634 to pay out $1,656 annually for 10 years. So again, you can pay those annual premiums annually, but if you're looking for that single premium and maybe a little bit of savings and compliance and ease of business at the same time, 10-year term certain, you can do that. We bought it through Empire. So annually, Empire Life will pay us that distribution of $1,656 in order to pay the 10-pay on the estate max. Saving overall just under $2,000 of premium, or 11.6% on the overall premium they would have spent on this contract by still getting a 10-pay contract for $100,000 for this young girl. Allowing for, again, simplicity and ease, of course. And again, the only thing I would comment and kind of stress here is the timing is uber important. What I mean by that is you need to get an insurance contract approved, then work backwards on the annuity. So steps wise, get the insurance contract approved, then we get the annuity to match the premium and kind of get it all done within a couple of days. So there's a bit of stick handling up front, which your account executive team, wholesaling team can give you a hand on that, but there is the opportunity to put this concept in place because the annuities are ever changing. So it'll allow you to just don't lock in the annuity before the insurance is approved. So work with your team on that. If that works. So what I'm going to do now is I just want to show you, if you don't already know where to find the annuity, I'm actually going to open up Empire Life's website. So Empire Life, to do an annuity quote, if you don't know where it is, you go under For Advisors. So you have two sections, client and advisor. Then we have investments, insurance, group benefits. Under practice support, I can simply get an annuity quote, and it will here's all your information, and I'd want a term certain with non-registered funds, and I would have put in the 1656 working backwards for an annual payment for this client, and I would hit submit. I've already done the quote, so I wanted to I'll show you the end outcome. So we had Grandma Joan is who I use in this particular scenario, had to pay out $14,724 for an annual pay of $1656. A small portion is taxable, so it'll be a T-slip sent, but it is matching the $14,724 to the $1656 required to go back. I skipped a step here to use my eVision software. in order to get the proper quote I'm looking for my child policy, which I was doing a 10 pay with paid up additions for $100,000. Nope. Sorry for this. A little slow when you're giving a presentation at the same time. So it should be that same premium we're looking for before. Perfect. I have the wrong age, but anyways, we'll get back to the point. Is you match it to the end premium using the 10-year term certain annuity. If you need help with that, sorry for the bit of a mix-up on the quoting software. I thought I already had it pre-filled, but that's how you match the annuity and do the annuity payment, working backwards in order to match your premium. Wendy, questions on that? I saw a few more things pop up.
Yes. So let me just scroll through. Is the guaranteed insurability available to purchase only whole life, or can it be used to purchase term insurance in the future?
It's only permanent. It only converts into permanent at this point.
Okay.
Good question, and not off the table, but at the moment, contractually, just if you're permanent. You'll see a lot more Empire child branded marketing ideas coming in the near future, but as of today, the answer to your question is it would convert to permanent only.
Okay. Somebody has asked, what if one of the siblings are insurable?
A good question. So in that case, it's typically a cash gift, seg funds, whatever makes more sense. But I've seen typically if there's 3 kids, 3 grandkids, and 2 are insurable, 1 isn't for whatever reason, either A, we wait until they are insurable if it's something, it's an age factor, or it's just a cash gift, or if they're haven't been disabled, put the money towards the RDSP. Because that's a lot bigger payout on that. So I guess it depends on the reason why they're not insurable.
Mm-hmm. Okay. And somebody's saying commissions on the payout annuity. I'm not sure if they're looking for a percentage or whatever, but if that's what you are looking for, we do have the commission schedules on the IDC Win portal. So you can definitely look at you can log into IDC Win and look at the commission schedules for Empire Life.
Yeah, exactly. Perfect.
And I think that's it. Sorry, let me just kind of people were asking for the links. So I've been trying to put the links in the chat
okay, thank you.
As well while you've been going through. Somebody says, what kind of tax form will be issued?
I believe it's a T3.
Okay.
Don't quote me. I'd have to double check. I'm pretty sure it's a T3, but I'd have to double check.
Okay. I think that is all.
Okay. Well, when it comes up, let me know. A couple more slides, and then we can ask you more questions. So think of any more questions that pop up. Mm-hmm. So in this case, just to reiterate how to sell this. And if you're already selling lots of child policies, I hope you saw the value Empire Life product and some of the positioning and the marketing. If you're still a little uncomfortable with the positioning of child policies, then again, this is the conversations. And the cash value even of itself is not the important part. It's what it will do. You're selling the sizzle, not the steak. So the cash value can be used for schooling. It can be used for your granddaughter's first house. It could be used for the elaborate wedding of their great grandchild many years down the road at 50. I have $109,000 of cash value in this scenario. So again, we as advisors tend to focus on maybe necessarily the steak versus the sizzle, as in these big cash values. But if my client can't envision what it's to be used for, and have a difficult time kind of understanding the value. So I tend to relate talking points of phases of life that would end up being reasons why they would have bought the insurance in the first place. So house, grandchildren, retirement purposes, whatever it may be. As some examples, maybe you have better ones than me. Life insurance benefit again. So we go back to the legacy conversation. So Grandma Joan here loves her grandchildren and is doing this for reasons of money outliving her versus just giving some more cash in a bank account, which has no value whatsoever. But now her granddaughter Olivia has a policy that will be with her entire life that was prepaid by Grandma Joan, and at age 90, the value here would have been $875,000 of death benefit with an internal rate of return of 4.74%. So again, IRRs for us math individuals to really appreciate the value of why I bought this, but from Grandma Jones' marketing standpoint, it's her understanding. Here's a gift that can go from the great grandchild, going forward. So a real amazing opportunity to have a legacy beyond your years, which is a big part of the marketing, whether you do it or don't do it at this point. Everyone has a different way of presenting, but I find that a big piece of the marketing of this is the long-term legacy. So that if that helps you, I hope, I believe that's a big part of the conversations to be had. So going back to Empire Life, I talked about this at the beginning, just to kind of recap. Remember, fast and full. If you are using that, you do have to ask the medical questions of the children. So it's the one time we do force you to ask questions. But the bonus side of that, the questions are limited, and 80+% are out the door in less than 24 hours. So remembering, child underwriting is different than adult underwriting. It's pass fail. It's not, there's no ratings or et cetera. It's either we can insure you or we can't. With that in mind, it speeds up the underwriting dramatically if you ask questions that are only will matter on a yes/no question set. So take full advantage of the underwriting process, the Empire Life with Fast and Full. And of course, if you sell Fast and Full, there's a great opportunity to earn extra compensation. Because you're asking the questions, you are doing an EHQ and an e-contract potentially, and the compensation goes up accordingly to market-leading compensation for our current promotion of the Fast and Full e-bundle bonus. So take full advantage of great product, great process, amazing compensation to reward you for trying something that you like to be doing anyways. So take full advantage of all those above. Last couple points. VIP underwriting, if ever you're in a scenario where you have a larger case, and we kind of market at 25,000, but really at 10,000 or more, we start bringing in our estate team. If you need some support, we have white glove treatment all the way across the board. If you need a Peter Wouters or an Alex Papali to speak in English or French, we can do help you and your clients. I have them speak all the time for advisors. Webinars are the easiest, but in person is available. So if you want them to speak on our behalf on a higher end presentation, they're wonderful speakers. I can always happy to bring them out if it's something that you're kind of thinking of your next marketing event. Utilize myself, your wholesaler, to bring in Peter and or Alex. My last slide is your call to action. I hope you enjoyed the hour that you just gave to me. I think we're about an hour, a little bit short. But I hope you took away some clients, some ideas, hit the low hanging fruit. Grandparent, the client that comes to your office loves their grandchildren, has a lot of investable surplus income. Great to talk to their grandchildren. Your marketing ideas, as you're talking about and thinking about your ongoing marketing, next generation opportunities. Why go find a stranger when I have clients already in my book? Again, pull some easy files. Take advantage of this and see where your opportunities are in front of you if it's a market you want to go after. So thank you for your business. Thank you for your time. I hope this was helpful to all of you. You'll get a follow-up email from me to Wendy, and Wendy will distribute it out accordingly. So my disclaimer, everything I've said is the best of my knowledge as of June 2023. And if left anything out, please do your own research and back-end knowledge on this topic as well. So Wendy, that was it for me for my session. Any questions before
there is another question. If the grandparents have little income but a big asset, can they buy the life insurance for their grandchildren? So I guess they don't have a ton of liquid, it's like they don't have, they have very little
leverage.
Income.
Are we using leverage here?
She doesn't specify. She just says they have little income, but I guess large assets somewhere.
Well, so, we need the premium, of course. So
yes.
That goes without saying. So if there's a leverage capability, potentially, like that's again, we can implement using Equitable Bank or Manulife Bank or your own institution or credit line. If it, wherever the money comes from, as long as it's legitimate, we are happy to take as part of the premium. Sure. If that answers the question, I'm not sure.
We'll see if she pops up another question. All right. Well, if there are no further questions, I just want to thank you very much, Mark, for your great presentation today. A lot of good questions. I know it's a very popular product as well. I have one myself for my grandson, so the 8Pay. And so if anybody has any further questions, let us know.
I just saw one pop up. Sorry,
did you?
As you're doing your thank you. What's the tax benefit for the grandparents? Well, the tax benefit is they invested on their grandchildren's behalf and no tax payable on their end. There's no, if the parents are investing, they're earning money for the grandchildren, transferring ownership, never pay tax on the growth. So that's your, and potentially dropping their current income, if that was non-registered money, currently earning money, which may claw back OAS or whatever. There's all different ways that there's a benefit to grandparents depending on scenario situation. Sorry. Thanks, Wendy.
No, that's great. Thank you so much for answering that. If there's nothing further, then again, thank you so much, Mark, for your presentation today. Thank you everyone who came to attend today. We had over 140 participants, which is wonderful. And yeah, if you need anything further, just reach out to your regional Empire contact there. And thank you very much again. Have a great day, everyone.
Appreciate it.
Bye now.